Congratulations, you picked the market crash. Today, I will be discussing the importance of the day and how impactful it was to the United States. The stock market crash of 1929 was the most significant crash in U.S. history. Although the crash itself only lasted 4 days, it led to a catastrophic sell-off. The Dow Jones Industrial Average lost 90% of its value between its record high close of 381.2 on September 3, 1929, and a subsequent bottom of 41.22 on July 8, 1932. That was the worst bear market in terms of percentage loss in modern U.S. history. It took 25 years for the Dow to regain its September 3rd high. The crash began on Black Tuesday, October 24th, 1929. The stock market opened at 305.85, falling 11% during the day. It regained to close just 2% down for the day. Nevertheless, Wall Street bankers were worried because trading was triple the normal volume. Over the 4 days of the stock market crash, the Dow dropped 25%, losing $30 billion in market value. That's worth $396 billion today over the 4 days of the stock market crash. The sinking of the market did not happen without any help. Speculation, as well as buying on margin, was one of the biggest reasons it dropped in the first place. Speculation is defined as investment in stocks, property, and other ventures in the hope of gain, but with the risk of loss. Therefore, during the 1920 stock market, many people believed that the market would continue to increase indefinitely, without even concerning it could plummet at any point. During this point in time, the Federal Reserve, which is a central banking system in the United States, that warned the people about excessive speculation within the market. Then, within a short amount of time, a minuscule crash occurred, causing investors to withdraw and sell their stocks that shook the market's foundations to almost a breaking point. Days later, a man named Charles E. Mitchell invested $25 million into the market that helped support and keep the stock from dropping at a rapid rate. Even though he put that amount of money into the market, it still showed signs of trouble. 9 years of steady increase had the public with smiles on their face, until the devastating crash in October. The constant speculation and belief came full circle and backfired in the end. Many investors thought they could make an absurd amount of money in the stock market, so many invested their entire life savings into the market. Being so caught up in money, they forgot that the market was volatile, meaning it could change at any moment. And that's exactly what happened. Speculation and investors think they can make millions bought stocks on margin. Then, when the market crashed on October 29th, 1929, they lost everything. The market crash was one of the most catastrophic events in the economy and the United States as a whole. It has negatively affected millions of people, forcing them to go into desperation mode. Food and the crops were affected tremendously, and our nation was in a giant pit of despair. So many people have been affected by this unforgettable occurrence. The economy tanked, putting millions of people out of work. The market crash negatively affected almost everyone, but there's a few people who benefited. A man named William Benton was associated with the toothpaste company Pepsodent. This company obtained loads of money and success. From the oral history, Hard Times, William Benton states, "The crash never hurt Pepsodent. Pepsodent sales doubled and quadrupled." This unbelievable occurrence was especially surprising during this time, mainly because so many people were out of work and struggling to do basically anything. Now, fast forwarding to the present time, the market crash led to many terrible things, but there was some good that came out of it. Now that our country experienced an economic crash like this, we are now aware of the signs and symptoms of another stock market crash. There are many signs that the market will crash, and this could happen even today. The chances are very high simply based on the fact that our nation is already in $1 trillion of debt. The United States must be cautious and aware of everything that is going on. Nevertheless, the sign that the market will plummet is when the price-to-earnings ratio rapidly increases to the point where the citizens have a huge chance in losing everything. Keeping the market up is ever more elusive and is inevitable to spiral out of control at some point. A market crash could happen at any point in time. We don't know the exact time, but it will happen soon enough. It could happen next week or in 6 months. Now, ever since the market crash and the Great Depression, the United States has the knowledge to reflect and prepare for what might happen in the future. If another market crash was to occur, we would have some idea of what to do and how to fix the issue at hand. Unemployment was a huge crisis during 1929, and so many people were struggling to get money and pay for their homes. During this time, people were retiring so they wouldn't lose any more money. Many people believe the worst time to retire was just before the market crash, because money was a necessity at the time. Nevertheless, it's a huge misconception that 1929 was the worst time to retire due to the sinking of the market. In fact, the year of 1969 was the worst time to retire. Just before the double-digit inflation of 1970, the community believed that it was the low interest rates that caused people to struggle the most, when in reality it was a galloping inflation. Inflation is defined as a sustained increase in the general level of prices for goods and services. It is measured as an annual percentage increase. As inflation rises, every dollar you own buys a smaller percentage of a good or service. The constant increase in goods forced people to stop buying them or finding a way to afford them. Therefore, if you were retired at this point in time, you wouldn't be able to afford the constant price increase of goods. It had many people get out of retirement, but overall it really impacted the retired community as a whole.